Okay, so welcome to the stream tonight, and it's our last paper for the November 2023 examination in the ICA exam. Let me just remind you that the strategic case study is 9 a.m. tomorrow. Okay, so 9 to 12 a.m. That's very important because unconsciously you've been writing all your papers in at 2 p.m. since Monday, but this paper is in the morning, 9 a.m. tomorrow. So you want to make sure that you keep that in your mind so you don't go screw it up. Because there are some people who are going to just go to auto default and factory reset, and they're going to leave home 11 or 12. And by the time they reach the exam hall, they will tell them that, oh, audit and assurance. Did you register for audit and assurance in level two? Then you realize that, So just be mindful of that. It's going to be 9 a.m. So you take note of that. All right. So what we want to do quickly is to talk about some few things that we have to talk about that I need to bring to your knowledge, and then also just go over again with the analysis that we have done generally in that particular case. Now, some of you guys are joining us on YouTube. If there are any questions, something specific, you put it in the comment section or the chat for me. I'm going to be answering your questions as well. Those of you are with me on Zoom also, you can raise your hand and bring you up with any specific questions that you have for me. So let's do some few things first because I want to just make sure that we confirm a couple of things. So let me just bring up my screen here. Yeah, I think I like that. Oh. So I told you guys to do the calculation for the total revenue. I believe that everybody has been able to at least do that because it's a forecast data that has been given to us, and so on the premise of that, I told you that then it is likely that the examiner will ask us to prepare a business plan in which we would have to prepare a cash flow forecast. So the unseen information will give us the rest of the data that will help us to prepare the cash flow forecast. So I believe that everybody here has done the calculation on the revenue perspective. I believe so that everybody has done the calculation. I told you that I'm not going to do it, and you are supposed to do it. So, and I had calls from some of you for guidelines on how to go with the calculation. So you need to get your revenue for the regular shito, the beef shito, the chicken shito, the pork shito, the chivon. So you need to get your revenue for each of them. They need to get the revenue for the total like this. So your flow is supposed to go like this. So you're going to have the various things that we have here. Let me just do this and show you probably how your presentation should be like. Okay, let me go this way. So each of the shuttle will come here. Then you're going to have total revenue coming in here. Then I'm going to bring in the size of the bottles or the cans and the bottles. Also like this. Okay, don't worry, I'm gonna make it a little bit smaller. So like this. So you're gonna make sure that you get a revenue for each of them. So for instance, when you pick the regular shittle, the prices are given respectively for each of the bottles that we have. So it means that we're gonna have for the 320 grams bottle, it is 639 times 55. That's going to be here. So 639 times 55. Then you get the revenue for that. Then you do for all of them for the regular shito. If you are doing beef shito to the same thing, all other prices. So it means that this prices here will apply to all the other shito like chivon, pork, chicken, and beef. So these prices will apply to all of the other products that the company is selling. Okay, chivon, pork, chicken, and then beef, respectively, in that particular case. So if you take something like, say, 1,000 grams for the chicken, it is 590 there. So it's going to be 590 times 1,000 grams, 170, right? So I believe that everybody has done the workings. It's on your own in that regard. At the end of the day, you're supposed to get a total revenue for each of the individual grams for the bottles and the cans. So your total revenues are going to be here for each of the types of bottles and cans. Then you're going to get the total revenue also for each of the products that we have that a company is selling as well in that case, because we don't know the structure of the way this data is going to be used in the exam hall. Either we'll be required to work for the or work in the context of the type of the bottle or the sizes of the bottles or the containers, or we're going to be working on a product specific basis. Usually it should be product specific basis and not really the sizes of the bottles, but it is important you understand and calculate the total revenue for each of the sizes. All right, then you get your total revenue for each of the products. So I believe that that is how you have presented your workflow in respect of the way the work is supposed to be done, and so you are good and you have got your answer in that case, because you need to do that. Now, you're not going to send this in the exam hall technically, but the idea is to know how the calculation is done, because when you get to the exam hall, you're going to do it all over again. Okay, just that you have to know what you are multiplying with what and what you are presenting in order to optimize your chances of using that data in the exam hall. So in the unseen information, which is going to be the additional information in the exam hall. Possibly you're going to be given additional information about something. The fun part is that you may go to the exam hall and nothing about this thing will be used for anything. It's not again because the examiner has wasted your time. It's because the examiner has a lot of options, a lot of questions that he can ask you, but he chooses what he wants to ask you based on the objective of the examiner for this particular examination date. So you may go to the exam hall and this data here, you may not use it for anything. In other words, there will not be business plan. In other words, there will not be cash flow forecast. In other words, the examiner will just travel through. Then you'll be like, oh, why then did he give us this? No, it is swag. Your duty is to be able to know, like I said, how the various calculations must be done for each of the products and each of the sizes, so that once you get these figures, know how to play around with it in the exam, or if you're supposed to use it, you know what you're supposed to multiply, and you work with speed and accuracy, bam bam, and then bring your figures up so that you can use them for whatever it is that the examiner would want you to use. So that is the issue about calculation of the expected total revenue based on the forecast sales for the 2023 year under review. So technically, we're not referring to this data here because the focus would then be using the breakdown and then the price schedule to be able to do our workings. So that's the first thing that I want to, bring back to your knowledge, and I believe that you have already done that, so you are good in that particular case. Then there are a couple of other issues that are still under this that I want to again draw your attention to. If we continue to read what we have here, we are told that according to the deputy CEO, the deputy CEO is Mrs. Martinson. Okay, the nurse who has turned to Shito Guru, she's the deputy CEO. Does costing and pricing of the products. Can you imagine that? So they don't have a management accountant as a manufacturing company like this. They don't have a management accountant. So on a weakness perspective, that is a weakness because you don't allow a nurse to be costing and pricing things. Again, it doesn't mean we are disrespecting people, but we are doing corporate issues. We need an accountant. We need a professional accountant. Why not let the accounting firm help them in the pricing and the costing thing? They could do that, but she's the madam. So you know the way madams behave. So she's behaving like a madam. So we have to respect her. So that is a weakness of the organization as well that we need to understand as part of our schedule in that particular case. And hence, there could be some limitations that we need to look out for when it comes to dealing with the issue in respect of this particular discussion. Because if the entity is not using a professional accountant to be able to do their costing and pricing issues, what are the limitations? They are likely to appropriate the cost for the products. They are likely to not set the prices appropriately, thereby resulting into the losses that a company is going to record or make at the end of the day. Give me a sec. Let me see. Thereby resulting into losses that the company can make. So there are limitations because as a manufacturing company, costing is key, pricing is crucial. So maybe the reason why we are told that there is a small margin on their product is because of the lack of management accountants or the absence of management accountant that they have as a company, which is a headache. So there could be a question that the examiner can throw at you. And this is a relevant question in the exam hall. It's a beautiful question that is relevant that the examiner can throw at you in the exam hall that, all a company needs is to employ a financial accountant because by law they are required to prepare financial statements and file their taxes, and then so the financial accountant can do that. However, the management accountant is not needed as it is an optional thing and is not required. Explain the importance of an organization having a management accountant. So that is a question the examiner can throw at you because management accountants are crucial for every organization, especially this company in question, manufacturing company, because you are buying a lot of products. Okay, you are buying a lot of products, you are paying people. We have to have a good inventory management system in place. Who does that? Management accounting. An effective budgeting system in place. Who does that? Management accounting. We need to have an effective standard costing measures in place. Who does that? Management accounting. We need to have an effective absorption of overhead systems in place so that we can accurately determine the costs we are incurring and set favorable prices that will help us to get a good margin or markup. Who does that? Management accounting. Management accountants. So that issue as a challenge that the company is having, which is a weakness, could be an area that the examiner will want to just pick your brain on the importance of management accountants in the organization. So it's something that you need to be on the lookout for, and I want to bring that to your attention so you understand exactly what is going on. Then the next, if there are any questions in respect of that, you raise your hand, I bring you up, or you put it in the chat for me. Then the next thing is, yes, Daniel.
Yeah, good evening. Please, the point you just raised, can we add it to the uh, SWOT listen analysis as a weakness?
Yes, it's a weakness. It's part of the weaknesses of the company.
Okay.
It's a fundamental weakness. Poor inventory management. as absence of the management accountant. So yeah, it's a weakness we can add.
Okay.
All right. Then the next thing that I want to also bring to your knowledge is, or your attention, is the next thing that I've put in there. I don't know whatever the heck color here is. Whatever the heck. The prices of Nikkei Shito are generally above the average prices one can obtain on the market for Shito. The customers for the company are always willing to pay more because customers perceive Nikkei Shito to be of high quality with consistent taste compared to most of the Shito on the market. Okay, okay. So they are above the normal pricing. That's the first thing. The second thing also is that customers of the company are willing because they perceive that the quality of the shito that NSL is producing and giving to the market is the best. So hit me, give me the best, and I'm willing to pay for it. This means that as the company is planning to position itself in the marketplace, please stay with me carefully here. As the entity is finding ways to position itself in the marketplace, they want to go to Kumasi, they want to go international, they want to open various outlets. So the company is trying to position itself in the marketplace to be able to continue to gain sustainable competitive advantage. Now, in positioning themselves in the marketplace to gain sustainable competitive advantage, we've mentioned that definitely the Ansoff matrix gives us four options, and we discussed this during our discussion session. Market penetration strategy. Hey, listen, you are in Accra, but a lot of people in Accra don't know about your shito. So what do? Advertise more of the shito in Accra, convince more people to continue to buy the shit, or buy it also for other people. Then also convince people using other forms of condiments to come and use the shitter of NSL. All that is market penetration strategy. Then we said, hey, listen, that's too small. Why not think big a little bit? Market development. We are in Accra. Okay, let's go Kumasi, let's go Takrade, let's go Volta region, let's go outside. That is called market penetration strategy. Even in the Accra, the market penetration strategy, we can go on a demography level. So probably they can have shit that they're going to sell to, boarding school people in the SHS, people in the tertiary universities who cannot buy, the standard, but we still want some shuttle to eat their goods. So market penetration. Yeah, product development and diversification is there, but we concluded that these two, as at where NSL is standing, is what they have to use in order to help them to position themselves in the marketplace. But beyond there, in addition to the unsolved growth metrics as a model to help companies to position themselves in the marketplace, give me a sec. Okay, let's go. So, in addition to the Ansoff matrix, to be able to discuss the concept of market positioning, two models come to town, and that is the Porter's generic model, where we will talk about cost leadership strategy. Definitely, that's not what this company is into. I mean, they are not the lowest guys, they are the best of the best. So they are in the upper class, differentiation strategy, and then focus differentiation strategy, concentrating on a niche of the market to go away. So Porter's generic is there. But really, the way the case is structured, per what we read here in this particular sentence, what will be suiting the company as a strategy for them to position themselves in the marketplace is the Bowman's strategic clock. Because with the Bowman strategic clock, the company position itself by setting or based on the price and the perceived value of the product. The price and the perceived value of the product. So if we look at the context of the scenario we have here, they are charging a higher price and people are willing to pay more because they perceive that this company sells the best. Okay. So it is more of a strategic clock environment perspective rather than a Porter's generic perspective. So since they have a perception that NSL product is of a high quality, it means that and their price is also above, you know, the average on the marketplace, they are using the focus differentiation strategy in that particular case. So they are concentrating on the niche in the condiments because if you remember, we spoke about various other types of condiments, but they are just focusing on that, you know, African shito context. So it's a focus differentiation, and in that Africa shito continent, sorry, subsector, they are the best of the best. Does that make sense? So for the market positioning bid, based on what is structured in the question, in conjunction with the ANSOF growth metrics, market penetration, market development, the Bowman strategic clock, on that, they will be using the focus differentiation. And that is also another thing that I want to bring to your attention. Okay. Now, that doesn't mean that the examiner will ask you a question about the Bowman strategic clock. He can actually ask you about the Porter's generic. Okay. Because it's about market positioning. And what a company is trying to do, if they want to position themselves in the marketplace, give me a sec. Let me bring up my slide. Okay, it's opening. If they want to position themselves in the marketplace, yes, they have to continue to use the focus differentiation strategy that they are using on the Bowman strategic clock. That's correct. But then, you know, there are 6 key principles that companies must follow when they are implementing some of these strategies under the Porter's generic. And so that is a question also that the examiner can throw at you that you need to know about these things. 6 principles of strategic positioning. And we discussed it. So it's something that the examiner can throw at you. He has brought this like 2 or 3 times in different examination guides because where the company is at, they are looking at positioning themselves to become, you know, the best of the best in the market. So it's something that you need to also be on the lookout for. Any questions on this? You can raise your hand or bring you up, or you put it in the chat for me. So that's the second issue that I want to bring to your attention. Where is my slide? Yes, Andrew.
Sure. Good evening.
Yeah, good evening.
So then earlier when I was going through the Bowman strategic
Right.
clock, sorry. But my impression was that the focus differentiation was more for luxury products. So
But shito can be luxury. You don't know that, right? You know, what is luxury? Luxury is simply anything that is at a higher price and have the best quality that can be afforded by a certain category of people. So anything at all can be a luxury. Are you getting the idea? So the shitter can be a luxury shitter, just like how sunglasses, phones, cars, houses, it's equally in that category. So anything that makes people think that is of a higher quality, hence they are willing to pay more, it means it becomes a luxurious product. I don't know if you get the concept.
Okay. I I was thinking that would be more of the differentiation, but
Oh, okay,
from the
okay.
explanation, clearly it
Right.
looks like it's more focused differentiation
Yes.
because of the high price.
Because of the perceived high price, the high price that they are
But
charging.
when
Uh,
you look at the case, so the difference between their pricing and the one on the market is not really significant, though. But for luxury products, the prices are
yeah.
way higher than normal.
When you say it's not like what is on the market, like you have some data to back that. All we can take here is that are generally above the average prices. So anything that is generally above the average price and people perceive it to be of a high quality and they are willing to even pay more, why not? It becomes a luxury. So then it means just a handful of people can pay more because only a handful of people can perceive something of a high quality and hence will be willing to pay more for that particular product. So your argument, yes, it's not that high if you look at whatever pricing that you are looking at, but we have to sometimes just stay within the ambit of the context of the case a little bit, unless otherwise that information is given to us in the exam hall, then we can conclude. But the grammatical statement here or the sentence here, we can assume that quote unquote from the context of luxury, we can put them there and it's a focus differentiation. Does that make sense?
Okay, we'll take it like that.
All right, so that is it about that. So we could have a luxury shitter and I mean the best of the best. Sometimes even iPhones. I mean they so the base iPhone will come. Then there are companies that will take that same iPhone and then will put it into whatever some carats of gold or have diamond on it, and they are selling the same iPhone that is for say $1,000 for like maybe $10,000 or $15,000. Why? Because I mean they've added some, uh, stones to it, and it's not that the functionality doesn't has changed, but that's the idea. So it could be considered. It could be
But
considered.
Nhyira, this is just for a certain segment of the market normally for focus differentiation. It's
Right.
not for everyone on the market.
Yes.
So and that is where sometimes I get confused.
So the idea about focus differentiation is that you see there are a lot of other condiments available, right? With and then we saw some other substitute of the condiments available. So they are not spreading their wings by doing all other types of condiments, but they are focusing on a certain type of condiments that is having the African ingredients like the what are the things? Huintia and pepper and esorowesa and ketenkete and formwesane prekesene sa nyomano. So that is what is making them focusing rather than going with the British, American, or French type of mayonnaise, ketchup life. So they are focusing on the Ghana traditional organic. So that's what is making it a focus differentiation. That's the idea. So that's the third thing that I want to draw your mind on. The fourth thing, which I think will be the last one, will be what we've discussed already, but I still want to bring it to your attention so you get it. It says that Daniel Edu, the non executive director, has told Mr. Martinson in confidence that the company's expansion plans are ambitious, which you expect to be, and this calls for substantial financial resources. Okay, and we've spoken about the various ways that they can fund this thing. In light of this, he has suggested that the shareholders contemplate transitioning from a family own business model. His proposal include raising equity through new shareholder investment or securing long-term debt. Mr. Matheson, in response, has expressed his willingness to consider these suggestions for the company's future. And so, the substantial, everything they want to do, they need money. Now, we've not been given the financial statement of the previous year. Probably in the exam hall, the examiner will give you that so that you can calculate gearing, calculate some ratios, and then we will just throw away this cash flow forecasting. I don't know. Because there's something about financial in the exam hall that the examiner will throw at you. We don't know. So if they have to borrow, I mean, would their financial support the borrowing? Would their finances support the borrowing? Do they have the collateral facilities available? How are they managing their finances? What is their position at this point? What's their liquidity level and all that? We must know about that. But we spoke about the various sources of funding this particular business. They can go issue the shares. We've said this over and over again. And if they are going to be issuing the shares, what is going to be happening at the end of the day is that they can still retain a greater percentage of the company at the end of the day. And that's not a problem. Because if you list a company, at least 25% must be made available to the public. So they can sell 40% and still retain the 60%. Nothing will happen. Or like we said, venture capital firms coming in to give them the money. Or better still, they can issue bonds on the capital market on the Ghana Stock Exchange instead of issuing shares. So they can issue loan notes if they meet the criteria. So there are various options available. Those financing options is an issue that the examiner could throw at you, and we've discussed this in much detail during our discussion session. So that is also the fourth thing that I want to, really bring to your attention on this once. Any questions? Any questions? Let's see. I think I'm getting something on YouTube. Let's see if I can bring that up quickly so that we can go. Thomas said, hello, Nhyira. What are the possible calculation questions the examiner can throw at us? I've already mentioned that cash flow forecast preparation based on whatever we have here in the context of the question. And then he can present you with financial statements in the unseen information for you to calculate ratios and analyze the financial performance and position of the company and the possibility of whether they are going to be able to raise additional debt finance in the future. So that is the issue in relation to that. Okay. So any other issue, probably something you identify in the course of the week that you want to pick my brain on quickly before I get excited? Any other issue? Maybe during your workflow you saw something in the realms of the spirit. Don't keep it to yourself. Let's see if we can deliver you from that so that you don't keep on carrying it. Or maybe you can carry it well. Which is which? Yes? Yes, Andrew.
Nhyira, on the costing of the products.
Right.
So in case we are asked to do the cost per unit calculation for each of the products using maybe the standard costing or marginal costing or absorption costing, that is possible, right?
Give me a sec. Yes, we can be asked to prepare a cost sheet or a cost card. It's possible if we are given the data about what the various materials and the cost that they incur and the factory overheads. It's possible for you to be asked to prepare the cost card for the company, and then if they want a profit margin or a markup, you add that so that you can get a selling price. Yeah, it's possible. It's in management accounting and you're supposed to know about it. So it's possible. But that will be based on the unseen information. If it is brought, then it could be asked to do that.
Maybe we can throw more light on that for us a little.
Oh, Preparation of
the
the
costing?
cost sheet or cost card is pretty simple. We're going to be bringing in the direct material cost. Now, this company is using different types of material. So based on the type of material and the cost per material, it will be given to us. Then we will multiply up. Then we bring direct labor costs, depending on the type of labor that they are using, direct labor that will be brought. Then, if there is any direct expenses that they incur, for instance, maybe we are told that they take the shuttle to Nkulenu Industries for them to seal the shuttle for them. That is a direct expenses that they are incurring. Okay, that's as direct expenses they are incurring. It's not material, it's not labor, it's a direct expenses. So that cost item is going to be coming. So the summation of all the direct costs gives us what we call prime cost. Okay, then we're going to add factory overheads. So I don't know if the question gives you the factory overheads issue, you add it up, and that gives you the production or factory cost. Production or factory cost. All right. Then after that, we add non-production overheads like the transportation cost that they incur in transporting the shuttle from their factory to Nkulenu Industry and back. Those are going to be non-production overheads that they are going to be incurring in that particular case that we can bring, or administration costs that they are incurring. All that will come, and that gives us the total cost of the product. Then we're going to add a profit margin or markup. It will be given to us in the question, whatever the heck they are using. Then we can get a quoted price or the selling price per bottle. Okay, so if cost sheet, cost card, that's how it's going to be like. But the data for the materials that they are using, if you remember, give me a sec, let me see if I can pull this up. We're told the various things that they use. I mean, they are using whatever the heck, cloves, uh, cayenne pepper, onions, ginger, um, Eden fruits, that is precursor, anise seeds, that is nkete, and garlic. So all these are different types of materials that the price will be given. It's not something that the examiner will get a lot of goosebumps on. If anything, he will give you the cost in total so that he would then rather let you prepare the cash budget, which he has set you up for in the precinct. All right. So, but anything is possible. You can't underestimate what the examiner can do. But that's the cost sheet. That's the cost sheet.
Okay, thank you. I was just asking because it wasn't done professionally by a management accountant. It was done by
The
Mrs.
the woman,
Mrs.
Mrs.
Martis.
Martinson.
So
Yeah.
clearly there was something fundamentally wrong with their pricing.
Right.
So I
Right.
was thinking that probably they could ask you to also come up with the unit pricing compared to what they've done.
Okay. Not necessarily
That
be
was what I was
compared to what they have done, but just do the right thing for them as the consultant that they have approached you. So yes, it's a valid thing. It's a valid thing.
So this cost sheet, is it for standard costing or for margin?
Oh, okay. Uh, this cost sheet is for, we have two things: absorption costing and marginal costing, right? So this will be generally for, and then we have activity based costing. So depending on where you are coming from technically, but okay. So maybe let me talk about the difference. There we go. So in the absorption costing, what happens is that you get your total cost taking into consideration both fixed and variable production cost. So when we are dealing with the total production cost that you are seeing here, we're going to bring both fixed and variable factory overheads in arriving at the total production cost if we are in the absorption costing environment, because that is the default way of calculating the cost of a product, and that is also in line with IAS 2 inventories. But in the marginal costing environment, we value, or we get a cost of a product using only the variable production cost, which means that if we're in the marginal cost environment, what will happen is that in the factory overheads, we will only bring variable factory overheads, not both variable and fixed, only variable factory overheads to arrive at our total production cost or the factory cost. So that's the difference between absorption. In absorption costing, both fixed and variable factory costs are brought in, but in marginal costing, you bring only variable production cost in the workflow. Activity-based costing is a bananas on its own, because that one you have to calculate the overhead absorption rate, because you need a cost pool, and a cost driver. Okay, then you can calculate the overhead absorption rate, you can allocate, then you can determine the cost in that case. So that one, maybe you're going to look at it. There will be a video on our YouTube channel. If you want to look at it, you can look at it on how that is.
It's okay. It's okay. It's okay. Man. At this point, here, we can't have all this in our head.
Okay. All right. So that is the idea about that. Yes, Daniel.
Yeah, so with the cash budget, aside with the revenues that we have, some of us, maybe what other information do we need to add it up?
Oh, yeah, yeah, school, mo.
Ache. It is like and Kaiwo school.
Okay, so we're gonna have the receipt. This is the pro forma. We're gonna have the receipt. Okay. So under the receipt, you're gonna bring your cash sales if there is any, and then receipt from credit customers. So cash from credit customers, because remember this company sells on credit. So there will be a way that they have to collect the money. That will be based on the question. Maybe they will say sales for each month is collected in the following month, or 20% of sales is on cash, 80% will be is on credit, and this credit sale, 50% is collected in the month after sales, 30% is collected in the following month, that kind of thing. That's cash budget for you. Then maybe other receipts, because we are told they have some investment incomes, which they have suffered some haircuts on though, but whatever the heck, some investment income could come in, all right? And then any other receipts, maybe they will sell some assets during the year, okay? Disposal of assets. All these will be under receipts. Then on the expenditure side of things, again, all this information will be given to you in the unseen information if truly the examiner wants you to prepare a cash budget. So on the expenditure aspect, we'll bring payments to suppliers because they buy a lot. So how do they make payment to the suppliers? The flow will also be given in the question. Maybe they will buy some assets. Okay, so acquisition of assets will come in here. Maybe they will pay some wages and salary. That's also going to be coming here. Please, depreciation is a non-cash item, so depreciation doesn't come here. Impairment of asset doesn't come here. Amortization doesn't come here. Provisions doesn't also come here, because all those items are non-cash items. So on the payment side of things, these things will come. So when we finish, we get a total receipt, total expenditure. The net of that will be either a net surplus or deficit. Surplus if the receipt is more than the expenditure. Deficit if the receipt is less than the expenditure. Then you're going to be bringing in the issue in relation to the opening balance of their cash, which will be given to you if the examiner wants you to do this. And then that will give you the closing balance for the period under review. So that's the way the cash budget it's gonna be like. But like
for
I
for
said,
for for each of the product, right? Like
yes,
the
if they want,
chiffon, chiffon, and that kind of stuff, right?
yeah, that is if they want you to prepare it for each of the product. But technically, it wouldn't be done like that. I don't know
Oh,
though, but technically, it wouldn't be done like that. If anything, probably these are annual sales. Maybe it will be broken down into every month in the year
Oh,
2023. Then, because then they will ask you to prepare for the first 6 months for the year
okay.
2023 for them. Because usually we wouldn't do it for products specific. We'll do it for the whole company. So we would
Oh,
then be giving, these are annual sales, but then it would then be giving how much sales they expect to have in each of the months throughout the year, probably like that. Then we would then, based on that, the examiner will say, do for the first 6 months or do for the whatever. That's the idea
okay. Okay. Sure. Good. I feel Makai. I feel Makai.
there. All right. Any other questions on this cash budget issue? I said then evaluate the project using MPV. Which project are you going to evaluate? Linda. Which project are you evaluating?
The shit up project.
No, when you're towards you, project no way. There's no project here that will require them to do any evaluation unless in the precinct they want to buy something. They are buying an asset or something like that, then investment appraiser will come in. But as at where we stand now, investment appraiser are there. Linda. And now when you be soon soon you say, catch you na obia hu na soon soon we are safe for buying of the canning machine. Uh, that thing is $50,000 to $200,000. So yeah, if you are giving the cash flows in the unseen information, then the NPV can come in. The NPV can come in to appraise the project. But remember, when we are that machine that they want to buy, if they want to appraise it, there are various methods available. There is NPV, there is payback period, there is accounting rate of return, there is internal rate of return, there is discounted payback period. So from that perspective, each of these methods can actually be asked. Okay, and for that to happen, it means okay, they've gotten the money, whatever the heck. They said $50,000 to $200,000. Okay, they want to buy. All right, then the examiner will give us details about the asset, how much cash they will expect to generate from the asset. So if he does, fine. Then you can appraise the project. And then in that context, if you are learning appraisal of projects, then your best bet is to learn all of the methods in that particular case. Learn MPV, IRR, payback, discounted payback, and all of them because you don't know where the examiner will come from. They are all methods of evaluation a project. So if you're coming from that angle, I mean, that's understood or can be understood there. Yes, Augustine.
Hello, sir. Can you write the formula for the IRR?
Internal rate of return. That is A plus
Yeah,
NPVA
I couldn't.
over NPVA minus NPVB
Was it the
minus A
small one? Right.
all square. So this is the formula for the internal rate of return in that particular case. So if it is something that you want to be excited about, certainly you have to learn all the methods because it's not just one of them that will be asked. I don't know, but it's an option that is available. Any other questions for me? Any other questions for me? Any other questions for me? Um, let's see. I'm getting some YouTube stuffs. Let's see if I can bring some of the YouTube. Unistete said, "How do I get access to the previous videos?" Which previous videos are you talking about, Unistete? Which previous videos? Please give me a sec. Okay, let's go. Hi, Nhyira, can you throw a light on corporate governance issue? I don't know. I'm going to be running through that in a moment, so you can stay connected. What else do I have? Caveman finance team. Heh. A quick clarity on the source of funding bit. NSL is an unlisted company as per the case. How then can they raise equity on the stock market? By becoming listed. What else do you want? They must become listed. If a company is unlisted and they want to get issue shares, they become listed. So they can get listed by doing an IPO or do a right issue or do placing. All those things are available, right? So they become listed. And so we have to know about the requirements for them to be listed on the stock exchange in that case. So they have to become listed. Is buy or lease option probable for the canning machine? Yeah, if they don't have the money, they can go lease their machine. Probably for tax purposes, that will be even better than buying it outright. And we have discussed this uh, already as well. So they can lease the asset. If they don't have the money to buy, they can go lease it. That's possible. Caveman finance team. There you go. Thomas said, all right, okay. It's not loud. All right, so I think those are the only thing I have there. What else we got? Everybody good? Any other revelation apart from Linda's revelation? No other revelation. Ayo. Munja me life, mommy. Okay, so we have discussed the various issues that we need to look out for generally, based on the context of the case study. We've walked through the entire syllabus. Time will not allow me to necessarily go over everything again. So if there is something specific that you would want me to share my thought on again or drive home again, you can let me know. Then I'll just take that and then talk about them. Then we can go away in that particular case because, we've touched on everything. This is the list of the items that we touched on: critical success factors, stakeholder mapping, internal business analysis. We looked at SWOT, we looked at value chain. Then the PESTEL framework, we looked at that. Porter's 5 forces, we discussed that. The unsolved growth metrics, we discussed that. Organizational structure and configuration, we discussed that. The risks that the entity is exposed to, we discussed that. Corporate governance issues, we spoke about that. Accountant and ethics, we discussed the various issues there. Corporate social responsibility, we spoke about the various issues that we need to understand there. Business plan, we spoke about the things that we need to understand there. Change management, we spoke about the various things there. The finance issues and the preparation of the cash budget. Yes, Augustine, what you got?
Can you go through this one again? The risk and then the corporate what do you call it? Corporate governance.
Right. So we mentioned that the entity is exposed to a number of risks. So the examiner can throw a question at us in respect of, we should identify the risks that NSL is exposed to, and then how they can manage that risk generally. Or the examiner can just say identify the risks that they are exposed to. So we spoke about technological risk, that hey, there are a lot of automation technologies available that they are not leveraging on. I mean, we are told that they are social media. They are not excited about social media. I mean, you don't blame them. This is Enes, I mean, who is running a shit up business. Again, you see, like I said, it's not that we are disrespecting people, but we are just explaining how it is. So social media, they are not using it. There is e-com platform, they are not using it, and they are not doing anything. So that is a risk that they are exposed to as an entity. They are not using any automation, okay? And then they are not using any advanced production systems, and it's because of their financial constraints that they have. Then we said that the owners are, not technologically literate, and that is why the company is not leveraging social media, e-com platforms, and all that to increase their awareness and sales. But again, they gave some nonsense excuses that we said we're not going to buy, because they were like, oh, if we advertise, people will come and buy more. No, you just create some awareness, advertise. So that is the first type of risk that they are exposed to, technological risk. Then we spoke about legal risk, which is, compliance to the laws from the Ghana Standard Authority and then the Ghana Revenue Authority. Because remember, in the beginning of the question, we were told that this is a requirement for many supermarkets demanding the product of the company. And now that they have been certified by these institutions, they have to continue to comply with the laws and regulations. But in addition to that, we said also that it's a food company. So if they screw up the ingredients, they screw up the things, and someone eats it and it gets a negative health impact, the person can sue the company for some legal damages in that particular case. So that is a legal risk that they are exposed to. So we mentioned that the way they can reduce, or they can reduce this or manage this type of risks, is to ensure that they consistently go with their quality product that they are looking at, their quality control measures that they are putting in place, and most importantly, ensure that they are using the best ingredients to avoid any contamination, and continue to adhere to the FDA and GSA's guidelines when it comes to dealing with their operations. Then we spoke about health, safety, and environmental risks that they are exposed to. And we said on the environmental front, this company is environmentally sustainable. So it's not really a risk that they are exposed to, but the food safety part, we spoke about that. And we said when the shuttle, they said their shuttle has a shelf life of 9 months. Okay. But, is that really true? Okay. What about when we open the shuttle? How long can it be there without developing those bacteria that we talk about, right? Salmonella and then Listeria. These are bacteria that affect, shito. You did science, but you didn't learn about some of these bacteria. Then health risks, supply chain risks. Then reputational risks, we said, there's no one-liner definition for reputational risks, because it's actually bundled throughout other things. Because when the entity doesn't produce a quality product, when people get sick after eating the shit, or if they don't comply with the laws, the rules, and regulations, all of those things can affect the brand, the goodwill of the company. So they must ensure that they continue to do what is right. Market risk, the risk that there's going to be changes in the prices of the things that they are buying with a high level of inflation in the marketplace, and the various climate issues going on around. It's likely that supply for the nkete, prekese, and whatever the heck they are using may be changing. Then also, we realize that the company is in a highly competitive environment. That is part of a market risk, because it's likely that one company can come in and they could provide a high quality shuttle to the customers, and they will love it, and then boom, we're going to be out of the marketplace in that case. So market risk, we spoke about that as well. Then we spoke about the various ways of managing the risk. And I told you to read on, there is avoidance, there is reduction, there is transfer. Okay? We spoke about this. That is where, the TARA principle comes in, TARA risk management in that particular case. Transfer, avoiding, retention, and then I've forgotten the A, but TARA risk management. Let me see if I can pull it up here.
Accept.
Accept, okay. Right. So the examiner can ask you, using the TARA framework, explain how the entity can manage its risks. When you hear TARA framework, it's not that it's in mass. It's not in Pluto. TARA is just a short version of transfer. Okay. Um, the A is what's the A for avoid? R is retention, and then A is accept. So just like PESTEL framework, political, environmental, social, TARA is also a representation of those four things. Okay, so if you hear Tara, don't scream and say, "Hey, Tara, Tatara." No, no, no. It's just a representation of those four items. So the examiner can ask you to use the Tara framework of risk management and explain. In that case, we are talking about these four issues and how the company can use it. And then the last thing, it will be the ISO 31000, their risk management framework. It's something that the examiner can ask you about risk architecture, risk strategy, and risk protocol. These questions will not be contextualized. They will be generic questions. So you're going to be providing your answer in a generic manner, so there's not going to be contextualization generally. If the examiner wants you to contextualize, then it will be specifically the individual types of risks that we have identified for NSL. How can the entity manage these risks? That will be the contextualization. But if the examiner throws you out there generically using TARA or ISO 31000 framework for risk management, then you are in for a treat, and you have to write these English, generally down. So that is the risk management bit about this discussion. In terms of the governance issues, we raised a couple of points that, this company is having a poor corporate governance because of the single individual domination. Mr. Mattinson is the CEO of the company. He happens to be the head of the marketing and credit department of the company. That is too much power to be put in the hands of an individual. Yet it's a family-owned business, but we don't care. Because when we're talking about governance, governance is governance. So although, again, the question about governance may be contextualized, or the examiner could throw you out there generically. So if the examiner throws you out generically to explain the governance issues in your friend is saying NSL, you don't say, "Oh, it's a family owned business, so single individual domination is not a problem." No, it's a problem. That is why they are not able to get the loan they want to get. That is why they are not able to grow the way they want to grow. Because one person or just a few people doing things. There has to be that level of segregation. Then we mentioned that due to that, there is centralization of decisions. But organization of that sort could have some level of decentralization. Because Mr. Matheson, Mrs. Matheson, and their son, who finished the university with first degree in human resource management and who has not applied any of the thing that he learned in the university to the family business. Very, very useless. These are the three people making the decision for the organization. That is a governance issue. Because they don't have any knowledge in accounting. They don't have any knowledge in costing. They don't have any knowledge in finance. That's a governance issue, and it's a catastrophe as well. Then the absence of independent non-executive director. Because we mentioned that for a board to be effective, the board has to be balanced. A balanced board, if you remember, we said that it must have diversity, okay, of experience, of expertise, of gender, okay, diversity. Number two, the board must have independent non-executive directors. So there must be non-executive directors on the board, number one. Number two, majority of the non-executive directors must be independent non-executive directors, which means they have no relationship with the company. They have nothing to do with the users of the company. They come in with their expertise and advise the company. Number three, a board is effective when the role of the board chairman and the chief executive officer is independently handled by different people, so that a non-executive director will handle the role of the board chairman, and then an executive director will handle the role of the CEO. But it's a family-owned business. It can be handled by two people, by the same person, if they have the board well structured. Then there is absence of, committees on the board. So lack of diversity of board of directors is one of the issues. Then there are no subcommittees of the board. Because if the company had an audit committee, risk management committee, I don't think the nurse, Mrs. Matheson, will be the one doing costing issues because she doesn't qualify. Okay, this is not cooking in the house that you can go to the market and go and buy things and come and cook in the house. This is business we run it. So there has to be those sub committees. Again, it's a family-owned business. We don't care where they want to go. They have to structure the board. They have to structure the board. And so we discussed that we must look at the importance of having those subcommittees like risk management committee, audit committee. They don't need a nomination committee. Okay, I mean, these people, but the examiner can ask you the functions of the nomination committee and then the remuneration committee. These are all subcommittees of the board, because remember I said governance questions may not have anything to do with the case. The examiner could throw you in a generic format and then you have to just answer the question the way it's being asked. But most importantly, there is no succession plan or succession planning in place, because although Mr. and Mrs. Martinson are running the company with the hope that when they go on retirement, their children will come and take over the business, there is no succession plan. Like, it's not there. And that is why a lot of family businesses, after the first generation, au revoir messieurs, the business is no longer in existence. So that is a governance issue. So to enhance future sustainability of the company, there must be succession plan. So if you remember, we discussed the benefits of having a succession plan and the various things that we need to understand, which is a weakness. All these things I've spoken about are weaknesses under corporate governance as a general thing. And we have to also look at their importance as well. So that is the governance issues in the case of NSL. But remember I said the question on governance could be generic. So I told you to also make sure that you read the governance codes. If you remember, told you that you read the governance codes, the Commonwealth Association of Corporate Governance, the OECD, Ghana's Corporate Governance Code, the UK Code. All of these things are in your syllabus. And the examiner has brought OECD, he has brought the Ghana's Code. He can bring any of them. And like I told you, when you are reading, you have to pay attention to the specific provisions in the codes, because the examiner can pick just one, which he did once in the last 2 examination night when he brought the Ghana's Corporate Governance Code, focusing on setting the remuneration of the board of directors, what factors an entity should consider. And that is just one of the principles of the Ghana's Corporate Governance Code. So know about all of them, but also know the details under each of the codes, because the examiner can just pick one of them and ask you a question about it between 5 to 10 marks in the exam hall. And I told you this during our discussion sessions as well. Then we made mention of the fact that this company is just focusing on, they're like, hey, let's produce. Board is a waste of time. So why should a family-owned business have board of directors? So the importance of the board, the significance of the board of directors. So we discussed some points also in respect of the significance of the board of directors. I mean, they bring in diversity of skills. They will help the company to be well structured and have better controls in place. They will help the company to also get access to finance and access to other capital assets that they may require. Because imagine them bringing, an investment banker, or maybe, somebody who is in the financial market, is a member of the board. That person's relationship can cause the company to get loans at favorable interest rates for them to buy the canning machine that they are buying, so that they avoid taking the thing to Nkulenu industry for them to can and seal for them. And so that is why they will need the board, and they will need to have that diversity on the board, because some people on the board, their name alone can open doors for the entity and can help the entity to get a lot of benefits that they wouldn't have had if not for that person's presence on the board. So some of the benefits of a family-owned business having a board, it's also there that we said you need to know about generally. Then I threw something in there to say that many family owned businesses at the initial stages, like in the case of NSL, instead of having a board, they could have what we call an advisory board. And so we discuss the distinction between the two, or the difference between an advisory board and a formal board of directors. And so it's something that you just have to understand. And the reason I chipped this in, it's because of the nature of the business. And maybe the examiner could shower some blessings on you. I don't know, but that's the idea about that. And it is part of the corporate governance issues that we need to really know about when it comes to dealing with that. Also, the CEO is an IT graduate who went through the ranks. There's a difference between being an IT graduate and using that knowledge to run a business. Oh. There are two different things. There are two different things. So you've learned, you've run through the ranks. Yeah, it's okay, but you're not using it to run your business. It means that's book knowledge, not practical. Are you getting the idea? So yes, I understand that. It's true. He is an IT graduate. That doesn't mean he's applying it into his business. Why are they not using e-commerce? Why have they not digitized their processes? Why are they not using social media? Any serious IT person will tell you that a business in this day and age from 2020 at least should be online. But, you know, probably the wife is overshadowing him. I don't know. I'm just saying, you know. The wife is saying that, oh, baby, we don't need social media. It's a waste of time. It's the work of the devil. Let's just focus on the shittle. Oh, baby. So he also keep quiet. But, you know, that's it. Yes, Linda. Yes.
Please, so looking at page 6, the corporate governance, they said they had a 4-member board of directors, which Daniel Edu, I think, is a non-executive director.
Yeah.
Daniel Edu.
Yeah. So what's your question?
From the pointers, there was absence of independent non-executive. Maybe it was just that.
You don't understand. There's a difference between non-executive directors and I think she even has a problem with a network. There's a difference between non-executive directors. What the heck? Okay. There's a difference between non-executive directors and independent non-executive directors. In the question, that guy, David Edu, is a family friend. So although, yes, he is a non-executive director, he is not an independent non-executive director. There's a different thing. That's why we said, yes, the board should have non-executive directors. Number two, majority, about 2/3 of the non-executive directors should be independent non-executive directors, meaning they have no relationship with the entity. They are not representing anybody's interest. They are independent so that they can offer their raw understanding, experience, advice, and recommendation to the entity. So that's the difference between a non-executive director and an independent non-executive director. That's very important. Yes, Daniel.
Nhyira, to even add to your point, one of the Ghana code of conduct for the board of directors says that the chief executive officer should not appoint the board. And if you read the question, it was the Mr. Atkinson who appointed that guy.
Yeah,
So it
the issue here
conflicts.
is that because they are the owners, again the management of the company, that is where the law will overlook this kind of environment. Because usually that will work for a listed company in that regard. But this one is a family owned business. They own the business and they are managing it. So definitely they will convene a board. They will appoint a board. So we could cut them some slack a little bit because of who they are. But the standard is what you are trying to say. And that is really for listed companies at the end of the day. What else do I have? Nhyira, please, when you are done, let me screenshot the beginning because I was having challenges with the network. Screenshot the beginning of what? Screenshot the beginning of Ebaze. Beginning, did I even write anything? Okay, this is what I did. The pro forma for the calculation of the total revenue. That was the first thing I did. So maybe you can take that. And then number 2, the market positioning. I think that's the only thing. These are the only 2 things that I really write. So I really wrote anything on generally.
Inji.
Yeah.
I think someone was asking for the mapping, whatever, the customers, the shareholders,
Really?
and that kind of thing.
Did I miss that?
Someone was asking if you could explain that.
Mendelow's metric, yes, I was.
Stakeholder mapping.
Yes.
Okay, so let me go there. Let's see. That's in the very beginning of the analysis. Okay, so the Mendelov stakeholder mapping. So identification of the stakeholders as the company is seeking to make various decisions. I mean, they want to expand, they want to grow, they want to go international, they want to go to Kumasi, they want to go to other part of the country, they want to buy an asset and all that. It's important we identify who their key stakeholders are and whether they are going to oppose or otherwise give the green light on whatever decisions that they are making, as an organization. And so that is where the stakeholder mapping concept comes in. And so from the context of this question, we will realize that their stakeholders will include their customers. Certainly their customers, they have a high influence on the organization. They are very powerful because they will call the shot. It's a highly competitive environment. Although they perceive our product to be of a high quality, that doesn't mean if somebody comes and also sells them something, they are not likely to go. Right? So they are very powerful and they are very significant. Now, really, they're not going to oppose any expansion that we're going to make as a company. Are you getting it? They're not going to oppose any expansion that we're going to make. But they are very significant and they are very powerful stakeholders whose interest we must make sure we protect, especially because the switching cost here is 0. If somebody buys shuttle from NSL and they don't like it, they could go and buy another shuttle, or maybe get some ketchup, or get some mayonnaise, or get some barbecue sauce, and the other ones that we spoke about generally in that regard. So they are very powerful. They're not going to be opposing the expansion strategy. The owners and management, in the context of this question, the owners are the same as the managers. Definitely, they are powerful. They are the ones proposing the deal. I don't think they're going to oppose any of the decisions they want to make, because at this point, even Mrs. Matheson, she's, losing her guard a little bit. Maybe she'll be the one to oppose some of the things that the entity is seeking to do, like putting together the board, having a well-structured organization. But, we can convince her a little bit so she won't oppose it. Okay, all other things being equal, she oppose it. I have a weird theory in my mind. My theory is that the woman will oppose the expansion strategy on the basis that when the company expands and the wife becomes the CEO, the wife will now be attending a lot of events, corporate events, and all that, and we'll see a lot of ladies. And before you know it, the wife will go and follow other ladies. So the wife will sabotage the growth of the business so that the business doesn't grow. Sometimes, some women have some strange mindset. Sorry about that, okay? That's not part of the discussion. Just that it's a theory that I'm having. Then the next thing will be their employees. Okay. Certainly their employees will not oppose any of the expansion strategies because in any case they're gonna get more to do. Their salaries will be going up, and then they're gonna get a lot of benefits from the company. So they are not likely to oppose it. Number three, the regulators or regulatory authorities. They are very powerful and they don't care about the company. They don't care about the company. So these people, we need to satisfy them. And they can oppose our expansion. So we got to be careful, especially as the company is seeking to find out how they can sell their product in the US, in the UK, in South Africa on a more commercialized level. It's important they speak with the regulators in that market. Well, so these guys, they are very, very powerful, and it's very important that for such people, we keep them satisfied by complying with the various laws and regulations that governs our operation. Then certainly suppliers. Definitely the suppliers are very powerful people. We saw that suppliers for the ingredients have lower bargaining power or low bargaining power. Why? Because there are a lot of them who are willing to change their prices. But the suppliers of the bottle have strong bargaining power. Why? Because the bottles can be used for other purposes and sometimes there are shortages there. And if we are expanding as a company, I mean, these guys, they are not going to oppose it. If anything, they are going to be satisfied because we are going to buy more from them and they will be willing to support us in that case. So these are a number of the stakeholders that we can talk about. We can bring in the community at large where they are operating in and bring that in as well. It's not a large thing that they have to consider in making their decisions, but for environmental purposes, which they are environmentally and socially conscious as a company, the community will not oppose them. If they go to Kumasi and they hear that, oh, it is this company, these are the things they've been doing, they've donated shit, oh, sir, mumbra, mumbeji asase, and they will support them. So they're going to get the love of the community on whatever expansion drive that they are seeking to make generally. So that is the stakeholder mapping by Mendello or using the Mendello matrix. Yes, Daniel.
Nhyira, please, with the customers accepting the expansion, I take a different opinion in the sense that if the company is going to expand and they are going to use more of the, let me say, the IT stuff, the canning machine, don't you think most of the employees will be laid off? So at the end of the day, although the expansion may bring maybe new employees, those who are doing the pounding, those who are doing the manual work will be laid off. So they will be opposed to, or they will oppose to this expansion.
Yes, if you come from that angle of those who will be pounding it, because we are told that they do the pounding, manually. But if they go automation wise and buy those advanced equipment, then definitely those people will not be happy about it. And so, I mean, they're going to oppose it. You're talking about the employees, right, Daniel?
Yes, Nhyira.
Yes. So yes, the people who are doing the pounding of the thing, they are going to oppose that kind of decision in that regard. So yes, that can be said there. But canning wise, we are not employing anybody for that anyways, so they will not oppose it. But if we bring in machine that will automate some of the things that we are now doing manually, then those people would have to be laid off. But it's not every time that automation or acquisition of advanced technology means we have to lay off people, because they could be retrained and integrated into the system, so that if now you won't do hey, 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 then we train you on how to work on the production line. So it's just about retraining them and still use them in the company. So if the company can guarantee that, hey, they're going to retrain the employees and still use them for the production of goods, for the manufacturing of the product, they will not oppose it. So it all depends on the way we communicate it to them. But if there is no communication, then they are likely to oppose. But again, this one is a small size firm. How many employees were we told they have anyways? 22? What the heck? What's the number of employees they were having? Do you remember? We're given the list of their employees. Was it 22 or whatever the heck? I don't know. You can cross check later on. So the size of their employees here.
25.
25. Okay. So the size of their employees here, I mean, who the heck? If you don't like, Mrs. Martinson will tell you, go to hell. Okay. Danny, are you okay with the explanation on the employees?
Yeah.
Okay.
Yeah, I'm okay. Yeah, thanks.
A destination could not be started. Okay. Could not be started. Okay, so that's it about that. So this question was asked by who? Who asked the stakeholders question? I don't know. I hope it makes sense for you. Any other issue for me? And now we're good. So like I said,
Hello, sir.
like
Hello,
I
sir.
said, yes. Yes.
The stakeholders matrix, some of the books have different way of presenting it. I don't know if they are all right or wrong.
Yeah, there is one other model that can be used. It's not
Nanado the do so ada or the down or the very crime.
there you idiot.
And I said, prepared in Asana.
It's a general
It
light
can be
out.
possible. It can be possible.
No, that cannot happen. It's a general light out, and then my chargeable light here also has just gone off. It means I didn't charge it or something like that. Can you imagine that? Oh goodness. Let me go. You let me talk. You can see my face or whatever the heck. Let's go. Whatever, let's go. Once my voice is heard, that's better. Yeah, so like I said, there's another model of presenting, the stakeholder. I've forgotten the name of that. There's another matrix available, but this is the common used one generally for it when it comes to dealing with stakeholders. And so that's why I stay with the Mendeley matrix. Okay, because we use their interest and their power to make their decision generally there. So that's the issue about that. Okay, so like I said, generally, you make sure that you read, because your questions are going to be spreading across like that, as we have discussed. And like I said, because of the structure of the forecast issue given to us, the business plan, and we sent you a sample business plan, the way it has to be structured as an additional document as well. I believe that you've received that document as well and you've gone through it. Remember, you're not supposed to send any material to the exam hall, and don't get any ideas as well. If they catch you, you'll be in trouble. So literally, you're supposed to just have an understanding of all of these material. In the exam hall, questions are going to be coming. Now, my final take for you is what I've told you already. Is a written paper. It's a comment paper. So you want to really take your time to read and understand the context of the question. Very important. Read and understand the context of the question. Very important. And then make sure that you are planning your work. Listen to me. When you get to the exam hall, 15 minutes reading time, you want to use that 15 minutes reading time to first go through the questions that are being asked. Now, during the 15 minutes, you cannot write anything. So when you read through the questions, you're just going to be holding your thoughts. So to avoid any pressure, you can decide to just use the 15 minutes to go through the additional information. But then you can go through the questions as well. All of the eight, I'm not supposed to give you any number. It could be 8 questions or 10 questions, whatever. It could be also 5 questions, depending on how excited the examiner is. So whatever it is, you read through the questions. Now, when they say start work, don't start. I need you to plan your work. So you open your answer booklet, the first page, write answer plan there. Probably in the second page, answer plan. What you want to do is to structure your thoughts out before you start writing. That's the purpose of the answer plan. So you have to, my recommendation is probably plus the 50 minutes reading time, add another 50 minutes. To read all the questions, understand the context of the question, and know what you are supposed to write. Please don't write any answer on your question paper. Your question paper, you will take it home. Nobody will come to your house and come and write anything for you. So the answers that you don't want to forget, come and put them in the answer plan in the question kit, in the answer booklet. So if it is question 5, whatever the heck, and they say, oh, use the Tara framework. Okay, then you can write the issues down, the points down. Okay, they said, okay, this code of governance, talk about it. Okay, you write the key points down like that. It's called answer plan. It is to arrange your thoughts. Then when you finish, you can then open to a fresh page and start with what you can do best first by now explaining those things. The purpose of the answer plan is that even if you are not able to finish, now when you finish, you're supposed to cross it out. But even if time doesn't allow you to write all of the things, remember, you've written the points here. You will be graced and be given some marks there. And it's also an additional marks you're going to get for professional presentation because you took time to plan out your answers. So that is my recommendation. I know 99.9% of you, you're not going to do it. But I'll tell you anyways. Because some of you, when you get to the exam hall, you want to start... Oh, I know my people. Because some of you, when you get to the exam hall, all you want to do is to start writing. And by the time you realize you are digressing, I feel now be trim. So take it easy. 15 minutes reading time, read through the additional information, read through all the questions. Then when they say start work, please don't start writing anything. Come and do an answer plan. So for all of the questions, whatever you remember about them, based on the discussions we've had, you don't want to forget it, write those points down. Don't write anything on your question paper. So take time to read through all the questions. Don't just read question 1 and question 3 and say, hey, I know this. Let me go and answer it and come back. Read through all the questions. That is why I said, in addition to the 15-minute reading time, add an additional 15 minutes or probably even 20 minutes. The planning in case study is important. This is why many people fail the exam. They don't plan. They just start writing by heart. And before you know it, you are just writing and writing and writing, and you have even forgotten some of the things. To prevent that, plan your work. And whatever point you want to write it down. Then you can then go to the fresh page, question 5, whatever the heck, and then explain. And you're not supposed to answer questions in any order. For any separate questions, what you want to do is to make sure that you are answering them on fresh pages. And sub questions, you are leaving 4 lines in between them. It's a professional paper. It's the final paper. The examiner wants you to make sure you are professional. And for those of you who don't know how to cancel things, you write, I am going to the market, and you want to cancel this. Like, I don't know what kind of school you attended. That's not how you cancel things. You cancel things like this. All these will be part of the professional presentation, which is a 10-mark question in the exam hall. And if you take it for granted, you could fail the exam just because you are not able to get some of those showers of blessings from the 10-mark presentation. So that's my recommendation to you. Take 20 minutes in addition to the 15 minutes, or 15 minutes in addition to the 15 minutes, to read through all the questions and then have an answer plan. Don't write any point in your question paper or on your question paper. The idea is, even if you are not done, you have written those points in the answer booklet. The examiner is going to see it and they are going to give you some marks for it. So if there is a question in your answer plan, which is a 10-mark question, and you have written 5 points here because the question said explain, but you have written the point here and it's a 10-mark question, you could get some 2 marks from that. Even if it is 1 mark, it's significant, because what the examiner is looking out for is for you to get something like maybe 45. Anybody that gets like 40, above 40, the examiner, they're going to look at the script again to find out what is happening. You get 45, they're going to find out, can this person pass the exam? So your script will be looked at again. Well, so in that case, okay, we come. You had an answer plan. Okay. The questions, okay, but you didn't get time to write. Okay. All right. Can we give 2 marks? Nah, 47. Professional presentation. Okay, the person's handwriting, the orderliness is not clumsy. He's not canceling like a KG2 student. All right, professional presentation is 10 marks. Let's give him 2. Wow. Now I have 49. You will pass the exam. So plan like that. Have an answer plan. It's my recommendation. And please stay within the ambit of the explanation. Some of you share your feelings too much. Control your feelings. And don't write plenty. Okay? Just be brief, sweet, simple, straight to the point. That doesn't also mean that you just write something small. If the question says explain, which you will have a lot, describe, which you will have a lot, then it's important you write the point and make sure that you explain the point. But don't talk a lot. Just be brief, sweet, simple, straight to the point. If for any reason there is a question you are looking at, but you realize that you are spending significant time on it, stop it, go to a fresh page and go to another question. Okay? Stop it, go to a fresh page, go to another question. My last recommendation, which again I know you won't do, is when they say get ready to stop work, put your pen down. Listen carefully. Again, I know you won't do it. And this is another reason why students fail the exam. When they say get ready to stop work, chances are you have 15 or 20 minutes to go, or they could say 30 minutes to go. If the invigilators are generous with you, they could say 30 minutes to go. When you hear 30 minutes to go, drop your pen and try to go through the things that you have written. It's a written paper, and sometimes in your brain you are writing, I am going to school. That's what you think you are writing, but then you actually wrote, I go to school. And then, bro, no, the did not come. Okay, and the going, which is a present continuous, you wrote go. So it means it's wrong. But in your mind, you are writing, I am going to school. But the actual thing you wrote is, I go to school. So get ready to stop work, drop your pen, and read what you have done. Control your emotions and read it. So that if there are certain minor things that you can do, there is a word that you didn't bring, you can bring it. There is a word that you wrongly spelled, you can just cancel it and then write it on top of it cleanly, nicely. Do it. Again, I know you won't do it, but I have to tell you what is right. So these are my general recommendation for you on how you're going to be approaching the exam. So number 1, have an answer plan. 15 minutes reading time, add another 15 or 20 minutes and read through all the questions and write out whatever answers that you think you are supposed to write for all of those questions that you can remember. Put them in the answer plan. Don't write it on the question paper. When you are done, Now go to a fresh page. Start with what you can do best first. Impress the examiner in the very beginning. So start with your best foot in front and let the examiner know that you can shock him. Okay? Because you see, you can start misbehaving at the latter end of the script and the examiner will understand, because by then you have sat down for 2.5 hours, 2 hours 30 minutes, 2 hours 45 minutes, and so your brain is dull. So when you start screwing up in the latter end of your script, the examiner gets it. But if you start screwing up from the very first question you answered, hey, and in school ben now call MBA ben now MSc ben now So you want to really impress the examiner. Start with your best question, what you really know you can do best first in the beginning, and then as you go on, you will see that you will be deteriorating a little bit. The quality of your answers will be deteriorating a little bit, and it's understandable. And since you have captivated the examiner in the beginning, subconsciously, you're going to be able to captivate him as you proceed with your discussion. It's a psychological trick that you have to adopt to be able to be in the good books of the examiner. So that's my recommendation to you on how you need to approach the exam generally in that particular case. All right? And I'm going to be wrapping up here. But from now till 9 a.m. tomorrow, if there are anything, maybe some miracles come again in your head, you can send me a message or hit me up, and then I will assist you on that. But that's generally it. Please make sure that you go through the various things that we discussed, and we have walked through the entire syllabus, and I've explained to you the structure of the way the questions are going to be and how you're going to be approaching the questions. So please make sure you go through these very well, because these are how your questions are going to be structured out for you in the exam hall. Know the contextualization, and know without the contextualization where governance is coming in, corporate social responsibility is coming in, risks is coming in, change management is coming in. Whoopil, the questions are going to be in this. Then I think I told you this earlier. Let me say it again. You're going to see a 10-mark question that you know nothing about. Don't take it for, don't be angry for it. There's going to be a 10-mark question 90% of the time that you know nothing about in the exam hall. It will be something that you may not have heard it from me. You might not have read it anywhere. There could be a 10-mark question like that. Don't beat yourself on that. You have 90-mark question that you have heard about, that you have known about, that you have learnt about. Go and fight your battle there. So these are all things you have to pay attention to. If there's something you don't know, you can tell, you can understand, please don't waste your time on it. Just go to the ones that you can understand and work for it in that particular case. All right? So that's it about that. Wish you all the best. This is your last paper. You're expected to be chatted after this paper. So go and make sure you make yourself proud, including your mother and your children and your father and everybody around you. All right? Bye-bye. Bye-bye.
Bye-bye.